The $2 trillion question. You've seen the absolute mania surrounding the historic NASDAQ listing of SpaceX under the ticker SPCX. It officially claimed its title as the largest IPO in human history. The noise flooding your feeds right now is fiercely divided. On one side, hyper-bullish retail channels are calling it the ultimate generational investment, the backbone of the strongest AI infrastructure stock because of its ties to XAI and global satellite supremacy. On the other side, prominent bears across the r/stocks and r/crypto groups are screaming that it's a textbook mega cap pump and dump. They point to the eye-watering $2.11 trillion market cap debut alongside a shocking $5 billion annual operational loss. They look at the massive 33% pre-IPO premium that traded on decentralized exchanges like Hyperliquid and Binance, and they claim insiders engineered a retail liquidity trap to dump their shares. But the signal requires us to separate the short-term speculative froth from the underlying asset architecture. A $2 trillion entity backed by heavy hardware, sovereign contracts, and global satellite constellations cannot be treated like an unbacked meme coin. Today, we take a surgical look into the financial plumbing. Is SpaceX a pump and dump or a new paradigm? My name is Newell. Welcome back to the Signal and Noise podcast. Please take a moment to subscribe. Let's dive in. To understand why so many retail participants are crying foul, we have to look at the chaotic price discovery mechanism that took place before the opening bell. Historically, investors waited for Wall Street, but this cycle, the crypto market completely hijacked the pre-market architecture with synthetic pre-IPO perpetual contracts. While SpaceX officially priced its IPO at $135, decentralized markets aggressively bid the price past $180, a massive 33% premium over the official listing. On the traditional side, retail participants flooded the gates with over $100 billion in subscriptions. The entire offering was oversubscribed by nearly 4 times. When SPCX finally hit the NASDAQ, it surged immediately to an intraday high of $160.95, cementing that $2.11 trillion valuation. When an asset runs this hard on hype, it triggers classic warning signs. Traders leveraged on synthetic contracts were quickly reminded of the volatility after a flash crash wiped out millions. Let's strip away the Elon Musk celebrity effect and look exclusively at the cold, hard mathematics of the business. Is there a fundamental reality here, or is it hot air? The bear case is simple. Net income margin for 2025 closed at a negative 45%. It is a capital-intensive monster burning billions to maintain 10 million Starlink subscribers. At a $2 trillion valuation, SpaceX commands a trailing price-to-sales multiple of over 109, significantly higher than even the most overextended AI stocks today. This extreme premium makes the stock vulnerable. If the broader macro environment experiences a liquidity crunch or the Fed signals a tighter stance, growth stocks will be the first to get cut. However, a true pump and dump relies on a valueless asset. SpaceX commands a near monopoly on orbital launch and holds multi-billion-dollar sovereign contracts with NASA and the DoD. It acts as the literal hardware layer for XAI's supercomputing ambitions. Wall Street is pricing it as an essential global infrastructure provider for the next decade. So, what is the tactical reality? If you are treating SPCX like a standard momentum trade, you are stepping into a highly professional meat grinder. Early insiders and venture funds require liquidity. They will systematically distribute shares over the coming months. Do not be surprised to see a significant pullback as that supply is absorbed. Keep a close eye on the synthetic derivatives. If the on-chain premium over the NASDAQ price begins to contract, it signals that speculative retail capital is capitulating. Traders are flipping for short-term arbitrage. If you want to build a structural position, you must wait for this speculative froth to completely clear out. The noise. SpaceX is a classic celebrity-driven pump and dump designed to trap retail investors at an absurd $2 trillion valuation. The signal. SpaceX is a hyper-growth tech giant currently experiencing extreme volatility, being priced for its future dominance of the orbital and computational frontier. However, the valuation is overextended. If you chase the momentum now, you are willingly playing the role of an exit liquidity provider for early-stage venture funds. Look past the hype candles. Let the distribution run its course. Watch the on-chain premiums and wait for the asset to find its fundamental floor. Stay sharp. Stay focused. That's it for this edition of the Signal and Noise podcast. My name is Newell. Do well to like and subscribe, understand the plumbing, or get left behind. Please, this is not financial advice. Do your own research. We'll see you on the next block.